Welcome to the only daily podcast focusing on compliance news of the day. Each morning, start your day with a cup of coffee and Tom Fox, the voice of compliance, to hear about 4 of the top compliance, corruption, or leadership stories you will need to start your day. The Daily Compliance News is a production of the Compliance Podcast Network.
The Daily Compliance News for June 8, 2021, the No Koala Bears edition. And we begin with that as our lead story, coming to us from the BBC. The Australian national carrier Quantas said it was disturbed by claims that some staff may have been involved in organized crime following an Australian media report that gangs had infiltrated the airline. The 9 newspapers in 60 Minutes reported the allegations based on a classified intelligence operation. It said the agencies believed organized crime groups had infiltrated Quantas to facilitate illegal activities. Quantas claimed that the authorities had not raised any concerns, but the government called for an urgent review of security at Australia's airports after the report. Next up, from the Wall Street Journal, a deep dive report into the failures of Credit Suisse, which led to its $5.5 billion breakdown. The fallout from Archegos' collapse shows the bank's creaky risk management system didn't do their job, leaving the bank vulnerable with out-of-date trading data and a big exposure to single stocks. There's plenty of blame to go around. There was human error, there was failure to report, there was reports that were made but there was no follow-up, and there was product failures. Credit Suisse is far behind the times in its risk management program, and given what happened to it with Greensill Capital and then followed directly by Archegos, points to an entire culture of risk management failure at the bank. FINMA, the Swiss banking authorities, are looking into it, and now regulators in the United Kingdom and in the United States are looking into this. Of course, Credit Suisse was under a deferred prosecution agreement for its prior AML failure, so it's unclear how that will relate to an open investigation, but it really points to the need that companies and financial institutions must have an entire system of compliance and risk management, and that it must be both products and people and management committed to an appropriate level of risk management. Next up, from the New York Times, Google will pay $270 million to settle antitrust charges in France over its ad technology. French will pay to French antitrust regulators who accuse the company of abusing its dominance in the online advertising market. The agreement was one of the first times that an antitrust regulator had taken direct aim at Google's online advertising infrastructure. So kudos to the French for actually doing something about the anti-competitive nature of big tech in the United States. And finally, we conclude with an article from this week's Always Great on Management column by Andrew Hill in the Financial Times. And in this, he talks about how businesses must have a strategic plan for going forward. And this is not just a wish list. This is not just simply that they want to do. You actually have to do the research, and then you have to test, and you have to plan, then you have to execute on your plan. If you're going to make a major strategic shift, or if your markets shift. So check out Andrew Hill's column, Always Great. I know you'll enjoy it. The Daily Compliance News is a production of the Compliance Podcast Network and a proud member of C-Suite Radio. Thanks so much for listening. I hope you'll join me again tomorrow.